It always happens after the halving, which is kind of here. There's a bit of chopping around. And then as we start heading into the US election, between June and August, prices start going vertical. Doesn't mean we don't get these sharp corrections in the middle, but things go vertical and we will lose our minds. So we want people not to fail. And I don't want people to come to us and say, well, you guys got it all right. Like, I've given you every tool. I've given you literally thousands of hours of video. I've shown you where I've got it wrong. I've shown you where I've got it right. Just be part of that trend. 2.5 trillion, 100 trillion. Don't get thrown off.
Welcome back to our channel. Today, we're diving into the insights of Raoul Pal. Raoul Pal begins by introducing the concept of the banana zone, a period where market liquidity drives prices to extreme highs, often leading to irrational exuberance and fear of missing out FOMO. He notes that this typically happens in the fourth quarter of pre-election cycle years, when liquidity injections and market optimism converge. According to Pal, this period will see significant price movements, particularly in Bitcoin and other cryptocurrencies. He explains that after each Bitcoin halving, there's a period of consolidation followed by a dramatic price increase as we approach the US election. This pattern is driven by increased liquidity and investor behavior, where traditional rules seem to no longer apply. Investors tend to lose their discipline and chase after rapidly increasing prices, often leading to market corrections and volatility.
Pre-election cycle years, liquidity, everything means that generally things should go bananas in Q4. So we wrote an article and we said, we called it the banana zone because things go bananas. Cut to, I don't know, by about March, June, March, April, maybe March, we had started applying it to say, okay, that was the banana zone for that quarter, but we've got the actual banana zone, which is when liquidity drives everything crazy. And then you start seeing those wonderful charts of Bitcoin. Each cycle, they kind of do this, and then they do this. It happens to be that. And it's when things go bananas and people fuck this up because they lose their minds, they FOMO into everything. It's when no laws apply anymore. The law of the banana rules all. And it always happens after the halving, which is kind of here. There's a bit of chopping around. And then as we start heading into the US election, between June and August, prices start going vertical. Doesn't mean we don't get these sharp corrections in the middle, but things go vertical and we will lose our minds. If we are having this conversation in 9 months' time, we'll be fighting with ourselves to try and maintain the discipline that we've been trying to teach ourselves because the banana zone will be happening. And it just caught everybody's attention because it explains a lot, right? That explains my entire macro thesis that I spent 2.5 hours explaining, and I could have spent 6 hours explaining, is all in that chart. It is also, he says, phallically, everybody's hopes and dreams. I had learnt from the last cycle that even if you're vaguely vague about how to navigate the space, people will A, get it wrong, fuck it up so badly, and then they'll blame me for it. There's a bit of self-preservation in this. So I'm like, okay, I'm going to make it a meme that is super fucking clear. I'm going to launch an NFT that you put in your Solana wallet that looks at you and says there's a little video file of me saying, don't fuck this up. And it's basically, don't use leverage, don't FOMO, self-custody, and keep most of your assets in the major tokens. Just simple rules of thumb that don't lose your crypto, don't lose your crypto, don't lose your crypto, don't lose your crypto. You know, if the mega trend is going from 2.5 trillion to 100 trillion, honestly, you betting on, some random meme coin is not the best way to capture that trend. You might be able to get a bit of that right. Capture the fucking trend first. Then you can trade around it a bit. But if you do not capture that trend, you will have done the opposite of the message. If I keep telling people, and again, this means a lot. It's like, this is the biggest opportunity. Don't come to me and tell me they made money and you didn't. Literally, there are thousands of high quality people into this space trying to help. None of us have all the answers. Don't expect us to be gurus, but we are trying to help. We want everybody to come with us. It's also self-interested because the more people that come with us, the more people succeed, the more the space is valuable. So we're all incentivized. So we want people not to fail. And I don't want people to come to us and say, well, you guys got it all right. Like, I've given you every tool. I've given you literally thousands of hours of video. I've shown you where I've got it wrong. I've shown you where I've got it right. Just be part of that trend. 2.5 trillion, 100 trillion. Don't get thrown off. Most true wealth is generated from one big bet. In markets, that's certainly the case. I don't know many people who run broad, diversified portfolios who end up becoming wealthy. Even Warren Buffett's portfolio is pretty concentrated. So concentrated bets really are the way, but that's very hard to do because, you know, you're trying to take the big bet over the mortgage crisis and stuff like that. They're hard to take. But here, we've got a bet that has everything going for it. It is driven by behavioral economics. So number go up means that more people come into the network, which means number go up. More the number go up, the more money's in this new digital economy that creates the applications layer, businesses being built on it. The more businesses being built on it, the more use of the blockchain, the more the number go up. The more the number go up, the more people come in. Before you know it, the finance industry wants. It is a supermassive black hole of, it's like the greatest behavioral scheme of all time. So it's genius for that. And it attracts people. Then you've got the debasement of currency. Then you've got the non-fit for purpose of the financial system that exists. Then you've got the fact that this is just digitizing value settlements and everything else, all of contracts. And so you've got a ludicrous amount of mega trends all in one point. It's liquid. It trades 24/7. It's accessible to almost every single human on the planet. It's like, come on, guys, this is the fucking big one. There is nothing ever going to be bigger than this.
Pal also discusses the potential impact of geopolitical risks on market dynamics. Events such as disruptions in major shipping routes or changes in oil market dynamics can have significant inflationary effects. These risks can lead to higher fiscal deficits and increased bond issuance, putting pressure on interest rates and potentially prompting central banks to monetize debt. Investors need to be aware of these risks and how they might affect asset prices and financial stability. Pal advises monitoring geopolitical developments closely and being prepared for potential disruptions that could impact market conditions.
If you remember the last cycle, it was Luna, Avalanche, Polygon, and Solana.
Yep.
Those were the chosen four.
Yep.
One didn't survive, and one was king, or crown prince, let's call it.
Yep.
Something will happen this cycle that will give us that bet again. That bet's incredibly rewarding, but hard to do, because there's a lot of things that look like they're going to last, and they don't. I always process these things after I've seen them. So I was on my flight home, I'm like, something weird was going on there. So I marked it down and like, yeah, there's something Solana. So Solana collapsed over the next 3 months. And so I started buying in June when ETH bottomed. I bought ETH based on liquidity analysis. I bought ETH in July 2022 and Solana. I was too early on Solana, got the ETH low, very, very close. And then I kind of left those positions and just continued to run them, and they all bounced and everything was great. No, ETH didn't bounce. I mean, Solana had the next leg lower. ETH didn't confirm it, which was really interesting to me as well. And I just kept adding in Solana. But I was still kind of like 30% Solana, 70% ETH at that point. And it was not until I had been then watching the chart of the Solana ETH cross in the same way I do the NASDAQ Bitcoin charts. It's like, what's the relative bet? And it was basing. And I'm like, this could break out. And I've got a thesis. This is the retail chain. And then I was in New York at Mainnet, and Colleen Sullivan from Brevin Howard, who's somebody I really respect, was on stage talking, and she just dropped, and obviously Firedance, which is going to be a game changer on Solana, blah, blah, blah. I'm like, I don't know what she's talking about. Next up was Toli. So Anatoly comes up, starts talking, and then drops a bomb, which was like, Jump think they've got this thing to be running at between 600,000 and 1.2 million TPS. And I didn't process it at the time. I was on the flight home. I'm like, 1.2 million TPS? That's 20x Solana's theoretical TPS of 60,000. I'm like, okay, this is a step change. And that weekend, I was writing Global Macro Investor over in Little Cayman. I looked at the chart just started breaking out. I went on Twitter and said, who knows about Firedancer? Silence. I asked Toli publicly, I said, when's this out? He goes, I think it'll be out on testnet by the end of the year. So it was a public, wasn't something I knew, no secret information. I'm like, that was it. I did the switch. I didn't have my Ledger device over that weekend. Julian bloody Bittel did, and he was doing his switch before and it moved like crazy over that weekend. And I got back home to my house in Grand Cayman on Monday and just literally switched everything.
Pal shares an example of how technological innovations are transforming the cryptocurrency space. At the Africa Bitcoin conference, he witnessed how AI and blockchain technology can democratize access to financial tools and services. These innovations make it easier for people in regions with limited access to traditional banking services to participate in the digital economy. He highlights the importance of staying informed about technological advancements and their potential to drive further adoption and growth in the crypto space. Innovations such as increased transaction speeds and improved scalability can enhance the utility and value of blockchain networks, attracting more users and applications. Please like and subscribe my channel.